Good morning, everybody. This is Michael coming to you from GammaEdge on Wednesday, June 19th with our morning strategy session. The morning call PDF has been posted. Encourage everybody to review that as well as the morning call. SPX commentary is in the SPX channel, so go ahead and review that. GammaEdge summary for today. Obviously, the CT is still on a continuation day, so we're still in a bullish up phase. Market model remains in an uptrend, continuation day here. We have the commentary for the transitions here. Encourage everybody to review that. Mark those on your charts. COI has shifted up to 4,600, which is still in a bullish stance, bullish phase. Zero DT folks, make sure you review all of this commentary here. Strong gamma 4550 to 4580. 4580 being the cap to the upside where I'd be watching today for possible stalling action. Overhead, we'll be watching the vol-D command for targeting throughout the day if you're a zero DT trader. Here's our market model labeled with the tag combos. Make sure you understand these and review these each day. If you're considering a zero DT trade or a continuation trade for our P-Trans to PGEX portfolio mechanical positions, I'll review those also. But make sure you understand the market model and CT as it respects to how you position and your trading plans. This is very important. We back tested this. We have all the results. And following this just keeps you on the right side of the market and definitely can enhance your gains and your accounts. For the SPX PM settled here, obviously positive gamma condition. We've marked 4,600 as COI has moved up to that level. This is important. That just means that the call open interest has shifted up, so we do see call speculation above us continue to go in. So that's important for the bullish stance if you're looking for the market to move up. We have a transition here labeled with the blue box, 45.15 to 45.35 here. We're watching the plus GEX to COI transition here. Spot price noted with the yellow bar here. So again, totally call dominated structure in the money, which is above, out of the money, which is above spot price, and in the money, which is below spot price. So no ambiguity for how the market is looking on the PM settled all expiries there. Zero DTE, we have a very narrow tight transition here, 45.40 to 45.45. We'll definitely note that the 45.50 is an important level that we'll see throughout the PBI charts. So below that 45.50, we would look for a possible move down to 4,500, but this is going to be kind of the line in the sand, at least by the zero DTE, plus one DTE, and some other measures that we're looking at. So I encourage everybody to understand what that means if you're above and below transition and how that can affect your trading today. 45.80 on the upside is where we're kind of capping the zero DTE unless we see extreme targeting above that. So move up to 45.80. You can see how the net deltas drop off significantly there. So that would be an area where I'd look for stalling and unable to push much higher into that area overhead. So really it's 45.55 up to 45.80 as we discussed from zero DT, and then 45.80 would be a stalling cap on price, at least on the zero DT structure. Plus one DTE into Thursday. Again, 45.50 is important. We'll see that come across many of the charts. So above and below that will be kind of your line in the sand for trading. Any pullback in the market, I'm going to be looking for supportive demand type action as we're still call dominated. Understand what that means. The nomenclature by the dip has a mechanical component that's related to gamma and dealer positioning. So understand what that means. If you don't, ask questions. That buy the dip gets thrown around quite often by many people and on FinTwit without a mechanical and understanding of why it is a buy the dip structure or environment. So any pullback down into this transition area, I'd be looking for supportive action, at least on any of the charts, the zero DT and plus one DT, unless we start getting below this 45.50 and really start seeing some targeting below 4,500. 4,500 continues to be an area on the downside, which would be a normal pullback and supportive action if we got down to that area. The combo complex for all expiries here, again 4,600, we see that 49 billion net delta, targeting above that, and COI, green dot there. We see where spot price is. We did note that the transition area has expanded greatly to the downside. So that just seems to be, as Paul posted also, some confusion of where people need to position. We'd rather have a narrow, tight transition than a wide and loose transition below us. So we'll see how this plays out. This could be just a one-day type look, and then it tightens up again into Friday or next week, but we'll just continue to watch this. Again, 45.50, 43 billion net delta sitting there, 277,000 contracts. So above and below that level might be an area where I'd be more bullish above and a little bit more cautious below. But any pull that into 4,500, you see 69 billion net delta sitting there, 445,000 contracts, and on a TA level, that 4,500 has been pretty important going back to a few weeks, kind of where we moved above and broke out and really started to move to the upside. The Vol D command, this is yesterday's targeting. Encourage everybody to understand how to use this. If not, ask questions. But we saw targeting early on in the day, 10 o'clock up above us into this 45.50 area. Really not much positioning to the downside, and this was really growing significantly pretty quickly, 30 minutes to an hour after the opening. So make sure you understand how to use this and how this can really help your 0DT trading. So if not, ask questions and we'll go through it. Here's the SPY charts. All expiries here, 460 above continues being targeted. That's plus GEX COI above us. So for SPY, 460 would be the target above. You see 455 here, and then below that, really pull down to 450 still would be supportive action in SPY. Call speculators still present above and below us also, even all the way up to 480. We do have some targeting up there on SPY. 0DTE, really a narrow transition here, 453 to 454, and then all the way up to 458, 459, and we see the net delta and gamma drop off pretty significantly. So I wouldn't imagine much push above this 458, 459 unless we see significant targeting. Nice support, demand action down below us into this 450. So that's where I'd be looking to get involved on the upside. Any pullback into 450. 450, below 450 could get a little bit weaker to the downside, but I would look for supportive action into that level. All expiries through the week, same levels really, just noted, nothing really changed there. SPY without today, all expiries really the same structure, nothing's really changed there. Goalpost really identified, as Taylor pointed out, where you should be looking to trade and then position for risk off. Without this week, all expiries into that. Past this week, again, same levels there. I'm going to go ahead and pull up the landscape view. So here's the landscape view, as I discussed, and Paul has actually just posted here. I noticed that loss of support below, or loss of support here is important to watch for positioning. 4,300 to the downside, 4,475. That's the line in the sand. Almost matches that 4,500 level that we discussed, really on a TA and gamma basis. So really, if you saw the pull back down to 4,500 in supportive action, depending on what the CT is doing, I'd be getting long the market, but below 4,500 to 4,475, a little more cautious stance, maybe just not put as much long delta on and wait for that to resolve itself. 45.25 here, we pointed out 45.50, kind of above and below. You see that gamma and delta really drop off there significantly. So I'd be watching that level, obviously confluence across multiple time frames in 0DTE, plus 1 DTE, and all expiry charts there. And then plus GEX 4,600, as we noted, moved up, so call speculation still continues. And then we even see these large speculators out here to the upside still present. So this really hasn't changed much, at least since last week that I've noticed. But plus GEX moving up to 4,600 is a bullish development back to the upside. Then we have the JPM hedge up here at 46.65. So TLDR, still bullish stance, still bullish structure. PM settled, call dominated above and below. 4,600 to the upside is where targeting is continuing to come in. Then 45.50 to 45.55 here. It's kind of an important level to watch. Then we have transition below us. So when you pull back into transition, we look to getting long in the market for a pull back to the upside. Tick continues to the upside, so we'll monitor that throughout the day. Tick US yesterday, new highs significantly outpaced the new lows for the past multiple days. So this is still extremely bullish. The only way we're going to see an overall change in the market would to see that calls start to get closed, exposing some of the puts above and below spot price, which we're not seeing at all in the structure at the moment. And then you'd want to see new lows really outpacing new highs. Filtered and cumulative tick would really start to move to the downside, and then CT you'd see a loss of the moving averages and start getting a railroad track to the downside for us to get cautious. But as of now, bullish supportive action on any pullback, and overall market structure is maintained. So hope that helps everybody. We'll go ahead and be in the chat in just a minute to answer questions. Everybody make it a great day, and we'll see you in just a minute. Thanks.